Our markets were closed yesterday, but the world was up and buzzing, and I wouldn't be sure about calling it up, but buzzing for sure, because let's take a look at what the US markets have done. They've ended rather flat, and the S&P 500 futures were also only little changed last night as investors digested Nvidia's latest results. Now, Nvidia shares were slightly lower even after the chip giant exceeded fourth quarter estimates on the top and bottom lines. We'll be telling you more about this earnings in a little bit more detail towards a little later in the show. On Wednesday, stocks came off the session's high as investors grew concerned about President Donald Trump's trade policies. At his first cabinet meeting, he said that duties against Canada and Mexico would take effect and that his trade war will include a 25% tariff on goods from the European Union. Now, on the back of all of this, the S&P 500 eked out just a 0.1% gain, which is very flat on Wednesday, ending its 4-day streak of losses. Well, it's very nominally in the green, but nonetheless, it was a day of flattish gains coming in for the S&P 500. You have the Dow that dropped 188 points, or about 0.4%. Nasdaq on the flip side added 0.3%. So overall, it's a very mixed day of trade coming in for Wall Street last evening, and traders will have an eye on Thursday's weekly jobless claims. But looking ahead to Friday's personal consumption expenditure price index, remember this is the most important gauge of inflation. It's also the Fed Reserve's preferred inflation gauge. So on the back of that, we can expect some volatility in Wall Street as well. But moving on from that, let's also take a look at what commodities were up to. And oil prices held at 2-month lows on Wednesday as a surprise build in US fuel stockpiles signaled demand weakness and a potential peace deal between Russia and Ukraine continued to weigh on policies. Let's take a look at how these indices have done, both your WTI as well as Brent. Your WTI is at 68.8, still below that $70 per barrel mark by quite a lot, and Brent is at 72.7, still under that 75 that we had seen it reach very recently. US gasoline and distillate inventories posted surprise builds last week despite crude oil stockpiles falling unexpectedly as refining activity ticked higher. This is what the EIA had said on Wednesday. Prospects for a peace deal between Russia and Ukraine are improving, the ING commodity strategist said in a note on Wednesday, adding that the market was also watching for potential implications of a minerals deal between the US and Ukraine. Oil prices, remember, recently have been weighed down by concerns that Trump's decision on tariffs against China and other trading partners could hamper economic growth. So while that was on oil, we also have another very important asset class, if you could call it so, to watch out for, and that's cryptocurrencies, because your crypto assets have plunged to multi-month lows. We've seen some volatility over there as well. Bitcoin has plunged 5% to $84,200. Let's see where it is. 84,887 is where Bitcoin is right now. Ethereum has hit a 5-month low, a 6% cut coming in on Ether as well. 2,345.8 per dollar is where Ethereum is right now. And crypto liquidations have also continued to mount. That is also something that is not looking good, because remember, over the last couple of trading sessions on Wall Street, you had cuts coming in across equities, and when there's a cut coming in across equities, you would expect an alternate asset class like gold or cryptocurrency to do well. But while that has been the case with gold, that has not been the case with cryptocurrency, and they have been moving in tandem with the markets. Although the markets recovered slightly yesterday, that has not been seen in cryptocurrency. So that is unfortunate when it comes to cryptocurrency. A 5-6% cut coming in on both of these major currencies, Bitcoin as well as Ether.
If you like this video, then like, share and subscribe to ET Now.